Welcome to another XLM price action update. Okay, so this is my third take to record this video, so apologize if I get through it in a quick way because it's already taken up quite a bit of my time. So in this update, basically we're changing the count. This now looks like it's a leading pattern, a type 1 week 5-wave move. Some might call it a leading diagonal if you're an Eliotician. Right? But because we broke the low back here, this can no longer be considered a 1-2, 1-2 pattern. But because we still have the corrective patterns in play, we haven't seen a break below the start of wave one. So I still think that this is moving higher. The reason for this could be because other cryptos are still bottoming out, such as Ethereum, potentially Bitcoin, and potentially SHIB. So, I do think that this wave E might terminate where it is now. It seems to have come back to retest the 0.88 area, um, basically like a 90% correction since the highs of May last year. It's retesting that particular fib support, potentially creating a support area before we start to make a wave 3 zigzag to the upside. Now, this type of thing would probably serve to create obviously a confirmation of the break of the previous wave E that started on the 31st of March, roughly. And it'd slowly go up there and confirm that before then correcting into potentially like a cup and handle type formation before then continuing higher. So that there is the crux of it all. As I mentioned yesterday, this doesn't appear to be a correction that will form another low simply because of the internal corrective patterns that we can see here. It's just like a sharp type correction, but that usually happens in wave twos of leading patterns. And then you usually get the move up for the wave 3 zigzag. These types of move can be a little bit uh, complex and daunting to observe, but if you understand that this can now probably be one of the only last options there is, now that we've cancelled out that 1-2 scenario, we can now probably expect this thing to sort of slowly grind up before then confirming that the reversal's in play and then correcting a little bit at the highs there. uh, Basically then we should start to see the prices go up, which would definitely be a good thing. So just going back to the larger picture here now, since I've put a Fibonacci here as I've done for a few videos now, from the lows of March 2020 up until May last year, we've already seen a roughly 90% correction. So to me, that's that's a pretty decent drop. Um, Dollar cost averaging is always a good idea if you're concerned about prices potentially falling further lower. But as I said, we'll get confirmation once we hit that magenta line at about 24 cents. But also once we start moving past 15 cents again, that should begin to sort of indicate the reversals in play. So apart from that, there's not much else to say apart from be patient, think of the long term, right? If you've seen my videos recently, I have the this changes everything video, which outlines the coming bull market that will be very similar to the 90s bull market in the Dow Jones. I'll link that video below, and I still do believe that we are right at the bottom on the Dow Jones of that wave two, and we're about to see something happen to the upside. So whether or not that starts off being, fast and swift, you just never know with these patterns. A lot of the time, patterns start off pretty slow and choppy, and then they just start to accelerate higher as time goes on, and more people get interested and start to feel a bit more bullish. Because at the moment, as I've mentioned before, the bearish sentiment is roughly around the same levels as it was back in March 2020. A lot of people have lost money during this bear market since May last year. So unless they actually hold on to it rather than sell it at the lows, which is what a lot of people do, then it's probably not a good idea to just jump in, not knowing, and putting all your capital in at once. Dollar cost averaging is definitely a good idea for inexperienced traders and investors. Now, this is not financial advice, obviously. I'm not a financial advisor, but I do think that dollar cost averaging is a safer way to mitigate against any potential risks. If you understand where I believe this is going long term, then paying these prices down here is not going to make much of a difference compared to what comes in the years ahead. So, I mean, it's up to you and your trading psychology and mentality. It also helps to know where the market is going in general, right? Because you could quite easily just take your profits at $15, as I've mentioned that as a potential target before. But what happens if it goes higher and higher and higher, right? You'd kick yourself. Even the most smartest investors take profits too early, and then they see this thing run and run and run. And I do not believe 2017 has anything to do with the coming bull market. In fact, it's the end of a correction. Just watch that video. I'll link it below, and it'll explain everything. So yeah, I mean, in terms of what's going on now, I expect to see a bounce. Obviously, you'll get confirmation along the way. First would be, I suppose, the previous wave 4, and then the next one would be, uh, like I said, around 15 cents. I mean, these are still peanuts prices, right? The prices are cheap as. There's really not much else to say. I mean, how much cheaper do you want it compared to where it could potentially go? Especially now that, even the Fed is admitting that inflation is going much, much higher in the years to come, right? And if you know the Fed, they're not exactly going to try and break the market, even though you get a lot of these bankers who are telling you that there's a big hurricane coming and hell is coming for the markets. Meanwhile, they're in the background buying it up, buying the dip. Meanwhile, all the regular people who don't really know what's going on, they're selling out at a loss. And who's buying that up? Obviously, the big smart money is buying it up. But you can just avoid all that if you just, think of the future, forget the doom and gloom, ignore the news, and just hold on to your stash, right? Don't don't get psyched out of the market just because some talking heads on the news say that there's a potential recession coming. I used to think that as well, but I did my investigation and there is no such thing happening. This is about as low as the markets will go. Okay. For quite a few years to come, we're going to see some massive gains. Whenever that crash or that top does come, I will definitely be one of the first to let you know. But for now, I think it's important to just, think of the future, stick to your game plan, and everything will work itself out from there. So hopefully you found this video interesting and informative. Thank you for watching.